welcome to my channel. My name is Jacob and today I'm going to be doing a 2 stocks I'm buying video. So I'm just going to go through 2 stocks that I'm looking to buy this month. I hope you enjoy the video. If you want to see more stuff like this, please subscribe to my channel. So the first stock that I'm looking to buy this month is Collection House Limited. Collection House Limited are a debt receivables company. So essentially what they do is they buy debt ledgers off of companies like ANZ and CommBank and Telstra and Optus and utility companies like energy companies like Origin and stuff. I'm not sure if those are the exact companies they buy stuff from, but they were just, general examples. They buy debt ledgers off these big companies who have a lot of customers, and what these debt ledgers are they're books, not books, like files full of customers that haven't, paid up on their loan or paid the interest on their loan or paid off the rest of their phone bill or something. They're just not paying it. And let's say, we'll take an example. Let's say Telstra is trying to chase up a customer who hasn't paid their internet bill in months, and they're just not having any luck sending them letters, sending them emails, trying to get them to pay their bill, but they won't pay it. So what they'll do to make life easier is they'll sell their debt off to a company like Collection House Limited at a discount. So let's say they were trying to get $50 off a Telstra customer. What they'd do is they'd sell that debt ledger to Collection House Limited for $40 or something. So then Collection House Limited takes that debt and tries to get the customer to pay up. Anyway, so the reason why I'm looking into buying them is because I think they're quite undervalued at the moment. So I've had a look at their balance sheet for the past 10 years. So the 3 things I look at here are EPS, which is earnings per share, and I look at dividends and book value per share. So for both EPS and dividends, you can just see from 2007, they've just consistently grown it over time. You can see from 4 cents to 13 cents to 8 to 9 to 10 to 12 to 14. And the dividends are the same. They've just consistently grown them. So yeah, anyway, the only real weird thing with their EPS, and this is also incidentally why their share price is so cheap. I'll pop up their Google share price. So you can see that they went from 17 cents per share down to 14 cents per share in 2015 to 2016. And that sent their share price plummeting. So I'll show you the equivalent graph on Google. And people just lose their minds when EPS numbers drops, and it's quite good because it makes for very good opportunities, because everything on this balance sheet just tells me that they're quite a vigilantly run company, and in the future all I can see is they're probably just going to have this consistent gradual growth that they've had for the last 10 years. I don't see any reason why it wouldn't continue. If you're wondering why it dropped from 17 to 14, that dropped because they didn't buy as many debt ledgers off of their clients. It's not really a big deal. They just made slightly less money, but the investing market just lost their shit, and now their share price is way low. So we'll move on to book value per share. So that's the same story here with book value per share, just consistent gradual growth over the years. Not once, well actually yes, once, only one time in the past 10 years has their book value per share growth actually dropped, and that was from 2011 to 2012, where it dropped from 98 cents to 96 cents. Not a big deal, guys, that doesn't worry me at all. Apart from that, it's just really good growth. Really slow, consistent growth, which is really what you want, which is really what I look for in a company anyway. That's what I really like to look for. It just shows that they're a really consistent company and you can rely on those numbers into the future. And the last thing I'm going to look at on their balance sheet, I'll pop it up on your screen, is their debt to equity ratio. They've just maintained a quite good, it's not as low as I would, I would like it to be 0, but if you don't know what debt to equity means, it's just how much money they've borrowed and need to pay back to a bank or something, compared to how much money they have on the books. So how much the company's actually got in assets. So their net worth, basically. So the lower it is, the better. In terms of that, like 0.72, 2007, they've just, up and down a little bit over the years, but mostly pretty good. That's fairly good. I looked for 0.5, but for a debt receivables company, I typically look for companies that have a debt to equity below 0.5, but I'll make an exception for one that's, either gradually reducing it or just, maintaining it. What you really don't want to see, a big red flag, is when it's going up. Like, that's bad news. The last thing I want to speak about Collection House Limited is because they're a debt collection agency, they don't have like the best, the public doesn't see them as very nice. They're kind of door knockers who come threatening with letters of give us your money sort of stuff, and I was worried about that as well. So what I did there is I'm going to reveal my little investing secret to you. One thing I really like to look at is employee reviews. So I go on Seek, I go on Glassdoor, I go on Indeed, and I look at like an uncountable number of reviews. I just scroll through them and see what the general consensus is of employees. And for Collection House Limited, it was pretty positive. There was a lot of positive reviews. People liked the company. They liked their opportunities for growth. They said that they got to travel and do fun stuff, and they enjoyed it, and they generally had about a 3.5 to 4-star rating. Yeah, so the reviews are good, and that was another good sign for me. And so I'm going to be looking to buy Collection House Limited this month. Don't just go straight out and buy it. If you're interested, please do your own research and develop your own understanding of the company before you make an investment decision. Anyways, I hope you enjoyed that analysis, but I do have a second stock to analyze now. And this one's going to be more of a speculative company. So this is a company I would never put more than 5% of my net worth in, because they have nothing to back it up. So as in with Collection House Limited, you had 10 years of history of solid, consistent growth, like something that you can sort of draw on to sort of develop a sort of a prediction for the future. But the next one, you have there's nothing to draw on. They're so new, and I'm really excited to tell you about this one, guys, because in July it's something very exciting happening in July for them anyway, and I'm going to definitely be keeping track of them. Without any further ado, guys, the second company I'm looking to buy in July is Snap Inc. Yes, so now you'll understand what I meant about having absolutely no history to draw on and how they're just purely speculative for me. I just it's kind of a thing I'm just going to put some money in because I use the app myself. I really like using the app, and I can see, I have a younger sister, she uses it all the time. All her friends use it. In between Instagram and Snapchat, that's all she does. So I can see the potential for massive growth in the future. And even just using it nowadays, there's so many ads on it, so many big players are playing ads on it, like Under Armour, McDonald's, Samsung. If they had, a bigger history, I'd be more willing to invest more in it, but I can't in good conscience make a bigger investment into something that has no history. But I really do believe in the idea. I really believe in the potential. Yeah, so that's why it's on my list this month. And the reason I put it on for this month in particular is because it's reached, I'm not sure what the date is, but it's coming up to the point where people who invested in the stock before the IPO, people who got in years ago when it was nothing, when it was just starting to grow, and he was looking for venture capitalists, when Evan Spiegel was looking for venture capitalists to invest in it, those people have made millions. And when Snapchat IPO'd, they don't let them sell their shares straight away because it would drop the share price significantly, because all these people who didn't have a lot of money and they just got lucky enough to happen upon Snapchat and invest in it are going to come out and say, holy crap, I can actually turn my investment into a profit. I can take that cash now, because after the IPO there's a 150-day limit, I think. I might be wrong. I'll put it up on the screen if I'm wrong there, but there's a limit. So a limit of time they have to wait before they can put their shares on the market. And it's coming up in July, and I just want to see how the share price reacts to that. I think it will probably go down, and when it does go down, I might be using that as an opportunity to get in. Anyway, if not, even if I don't, it's definitely going to be an interesting one to watch. Hey guys, I'm going to finish it up here. If you like the video, please leave a like. If you have any questions or comments, please leave it down below. I'm happy to answer anything. And tell me, are you going to look at buying Collection House Limited? Are you going to look at Snapchat? Or is there any other stocks that you're interested in this month? Let me know. I want to hear from you guys. So, alright, thanks for watching guys. Have a good day. See ya.